Hey Stockhouse, it's August 12th. We're in the dog days of summer here, but time for another edition of Markets in Motion. Have a little bit of random couple things here at the beginning before we jump into what we're seeing. The first is there was a lot of talk in the last several months about the expense of using AI and the LLM token expense. And what we saw was that that was rocketing up until May. Since then, we've seen quite a drop. So 43% drop in pricing. And as a result, that works out to a 95% annualized drop. So maybe not something that we have to be quite as worried about. It's like anything else, it gets commoditized. The second thing I want to bring up, just random, was seasonality with buybacks, and you can see that we're through a big part of reporting season. So here we are, we're right around here now, and you can see that the buybacks continue for a while before we start to slow down again once we get into some of the blackout periods. Let's jump into seasonality because I think this is important. A lot of investors get worried about sell in May and go away. They talk about the fact that the markets are always weak in September and October. This is looking at the TSX seasonality. You can see where we are right now. We tend to see fairly strong up until the middle of September, and then we see this pull back for probably around a couple of months. Keep in mind, this isn't a prediction. This is like looking at climate. So we know what the climate's supposed to be, but the weather itself can change from year to year on that specific day. If we look at the S&P, similar type of pattern, not quite as pronounced as the TSX. So we see this period up into September, a pullback that usually lasts a couple of months, and then away we go. I also wanted to focus on the VIX. There's a lot of focus on volatility and what's happening there, and you can see here that volatility tends to be spiking up around this time and then actually pull back into that September before it really increases into the October timeframe. Thought this was fascinating because just looking at a number of different volatility indices based on RRG, and we're not actually seeing that. They were all increasing, which is through what we just saw in July, and now they're all starting to decrease with the exception of a few things. So this is oil volatility. Makes sense that it's still really high here. Last thing I wanted to touch on was gold seasonality, and you can see here that seasonality for gold is actually quite strong. So we had this, we saw gold spike up into the February timeframe. It really declined until really into July, and now we're starting to see it move, and it should extend out for the rest of the year. Again, this is climate, not weather, but when we pair that with what we're seeing with some of the gold stocks, we see en masse that all of these sectors are really starting, or all these stocks are really starting to move from being in the lagging quadrant to the improving. And anytime we see it in an entire sector like that, I think you have to pay attention. And the last thing I'm going to touch on here is just some overall sector moves. We know what's been happening with semiconductors. We know what's been happening with software, and they've been going the opposite direction. And then the two other things that I want to just touch on are the gold stocks and the copper stocks. That's it for this week, everyone. Have a great week out there.